difficulties of the emerging world of crypto assets and goes a long way toward explaining why institutions are taking longer than the market expected to enter the sector. Crypto asset custody is riskier and more complicated than most of us realize. What's the problem? First, let's review what a hard fork is, a change to the underlying characteristics of a blockchain, after which mined blocks will not be recognized on the old chain. The old chain can continue to grow independently, though, with blocks produced by miners who have opted to stay with the unchanged technology. Hence the term fork, as the blockchain splits into two versions. Now, let's separate Fidelity's concerns regarding Ethereum from the potential problem that blockchain splits in general pose for custodians. The Ethereum blockchain recently underwent a hard fork to upgrade the technology and implement a few strategic changes. No hands-on action was needed from custodians or Ether holders, and by all accounts, the switch went smoothly. Hard forks do bring additional risk, however. Will the new version be as robust as the old one? The latest Ethereum fork was originally scheduled for January of this year but was delayed, again, at the last minute, because developers discovered a potentially serious security bug. Imagine if they hadn't found it in time. Another hard fork upgrade is expected, possibly towards the end of this year, but, as with this one, no chain splits are expected. Fidelity's caution has been criticized as overzealous, potentially leading to loss of business as institutional investors increasingly need reliable custody solutions for a range of assets, not just Bitcoin. But, given the reputational risk and the institution's traditional rigor when it comes to protecting client assets, it can be interpreted as solid business sense. Is it safe? Contentious hard forks, when chain splits are led by developers unhappy with the original structure, are a different type of problem. This has happened often, most recently with the recent split of the Bitcoin Cash chain into two competing versions, Bitcoin ABC and Bitcoin SV. Bitcoin Cash itself was the result of a contentious hard fork split from Bitcoin in August 2017. Generally, the holdings on the old chain are replicated on the new one, with the new characteristics embedded. Custodians don't have to support the new chain, though, and therefore might not custody these new assets, even if their clients are entitled